your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. This whole thing started supposedly on the earnings for Nvidia. They came out and they were just super good. We'll go back and look where they were a few months ago, but there was what happened. The ABCD measured the 202.71. The high was 203.39, so it missed it by 60 cents. So I guess that one didn't work. But there's your ABCD pattern. You can see the nice little 3-drive pattern here. But boy, ABCD, God, they have this. Let's hear the sound of one hand clapping. Come on, let's do that. But that's Nvidia, and let's just go now and look at the daily, because I want to show you the relationship here. If you remember back here, this is when the news here was much better than the news here. And they said this thing is going to go crazy. And this stayed up here. Honest to God, you know it because we followed it all night at 196. It stayed there for 9 hours, all through London and the opening. And then you can see what happened. Now, we've done the same thing, and look where we were. That was at 196, and here we are at 186. So this is not good. I don't know what's happened, but I don't follow the fundamentals, but something's not quite right. They've been saying for quite a while that there's been a lot of money leaving artificial intelligence. We've seen it in Google. Well, no. Time out, Larry. We've seen it in Amazon. We've seen it in Microsoft. We've seen it in Broadcom and so many others. Now, we haven't seen it in Taiwan Semiconductor, nor have we seen it in Caterpillar. But by golly, they're coming through on some of these others, okay? So that's what we're watching. Now let's move over to the stock market, see where we are. Now, if you remember yesterday, we were talking about this in the stock market. We'll get up to what we're using, which was our 4-hour chart. And we'll move that up over right here. And there's our 4-hour chart. And what we were doing, we were making a perfect ABCD at the 61% retracement of that move right there. There it is right there. There's your ABCD. And there's where you are right now. This is how much you've come down here. Come down about 500 points from the high that we made yesterday. So it's when we break this out, this is when we know for sure that the market is getting ready to do something really serious. Now, just stop and think for just a second, folks. This is Thursday, and I don't know where it's going to close today. Who knows? But then we have Friday coming in. Now, what happens if the market closes really badly on Friday? Maybe somewhere down in this area right here. Well, below here, you know what's going to happen. But if it closes badly on Friday, everybody, I'm talking everybody that's bought this stuff since way back on January 2nd, is underwater. And when they look at this stuff over the weekend, the mutual fund guys and the ETF guys and all these are going to say, well, maybe we better do some protecting. Well, you remember when trading places, Mortimer says to him, he says, get in there and sell, sell, sell. And the poor broker says, to who, to who? Because everybody was selling and nobody was buying. I don't know if that's going to happen, but that's how it usually works, because there's a problem out there with money. We can see that a little bit now, that the private equities, these are people that don't go through anybody except the investment bankers. The investment bankers do all the financing so they can bypass the banks and all that stuff. It makes it a really good deal for everybody. The problem is the record of their success is very, very poor. And not only that, they don't allow you to take your money out between 6 months and a year at a time. In other words, if you want to get out now, here on February, you got to wait till next February to get out. And people, they're in for the long term. Well, you know the story, how that goes. All right, that was a NASDAQ. Now we'll take a look at the Dow Jones, because that's one that's been, the leader of the pack. Now we had a really big run up here, the Dow, this morning. You can see we had a terrific run up. There it is right there. Right there, a big run up. Now let's see what that really was by looking at the 4-hour chart. Okay, I haven't looked at it yet, so it's going to be new to me also. We almost made the exact 618. We missed it by 10 points. That's where it is right now. Missed it by 10 points. So that is not that's not too bad. Now the thing is, well, that's just basic. This has been the one that's been holding up the best. Now we'll take a look at the Russell. Here's the Russell as we come up here and take a look at it. Now this is just the AI program laid over it. I just put this in because it lined up pretty nicely with that, and it's started to come down. But we need to go to the hourly chart here and see where we were. There's the same thing. Look, we just had a lower top through here again. One more time. There it was on Friday. Excuse me. And we'll see this one is just a little above. Well, let's measure it from here. That's the first one. That went right to the 618 again. We hit it 1, 2, 3, 4 times. And then the one we had just the other day is just a little above the 786. So that's it. And it's still holding up relatively well. There's no fear in here. Absolutely not. Now it's down a little bit, but there's no fear, not like that we see in the NASDAQ or the S&P potentially, see? So there's different bifurcated markets, as old Basil Chapman said. So we want to be paying close attention to that. I'll cover gold and silver next, but we have to show you this one, folks. If you like ABCDs, and who doesn't, there's one. You know, we've been friendly to this market for quite a while. We bought that 382 retracement, and it failed, and look what happened last night. We make a perfect 61% retracement, 1.618 expansion down here, and it rallies $3,000 straight up. And with the trading gods with us, you can see that it locked on pretty nicely to where the bottom was, and we didn't get in until this level right here, but that's what showed a pretty good run here, at least for today's market as we're watching this one unfold. Okay, now we got to cover a few other things here and that are important, but the $64 question is this what I've been waiting for? It's about as good as it can possibly get, folks, because where's that Dow Jones chart? If you remember, that Dow Jones chart was so bearish the other day. Right there, it was so bearish. I said, this thing has to rally. I said, because if it falls apart from here, something's wrong, and it did. Look, we rallied from 78. We rallied almost 1,000 points out of the 1,700 that we dropped. There's just almost exactly a 61% retracement. It misses it by 10 Dow points today, and it's now down 500 points from that high. So that's telling you that that's pretty much what we've been watching. This maybe this is it. I don't know for sure. I'm just saying that the way the market's reacting, you're going to know by Monday for sure, because if the market's down hard on Friday, when they look at those statements, and not only that, it's going to be the beginning of the month, shut the front door and raise the rent. That's not going to make anybody happy. See, you got the market closes on the 27th. Okay, that's a Friday. The 27th is a Friday. The 27th is Saturday, and the 28th is Sunday. So when they look at those reports over the weekend, say, whoa, everybody that's bought this is now losing money. Let's just look at this, folks. I'll be right back, and I'll show you what I'm talking about. Okay.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
All right, folks, this is what I'm trying to tell you. You can see here, there's the S&P. This is the whole month of January. There's December. There's the month of January right there. So this is where we are now. If we have a bad day today and a bad day on Friday and we close below here, when they read those statements, I'm telling you, they're not going to be looking to be buyer. Well, they could be looking for value, I guess, but that's the first sign that you're going to see something pretty dramatic. We haven't had anything dramatic for quite a while. I have to go all the way back here. You remember that? We had this big move down here into the 24th, a perfect 3 drive to a bottom pattern right in there. So maybe we're going to be coming in and looking at that. And as you can see, from these highs to this low right here, we went right up to that 382 and we hit it a bunch of times. There it is, 1, 2. So this will be the third time that we'd be looking at it. So it's not going to be easy, but that's what we're watching right here. Now let's play the devil's advocate here, because we've not seen anything like this in a very, very long time. What happens if the market makes a really big low down in here on, say, Friday or Monday or Tuesday, and then turns around on Tuesday or Wednesday and starts going straight up? Oh dear, that means that this thing that we're looking at could be a low instead of the high. I think the odds of that happening are less than 5%, but as I say, I'm often in doubt, often wrong, but never in doubt. So we got to watch it very, very closely. It's a day-by-day situation, as it always is when you're trying to control your risk. Now, on the negative side today, I wanted to show you a couple of things that I think were important, because we talk about these daily. And you'll know sometimes they work much better than others. But there it is right there. Hopefully it'll be right there in just a second. You'll see there was our 382 retracement today up there at 69.15. We've now dropped 25 handles down from that level. If you looked at the NASDAQ, we'll put this up here on a smaller time scale, you'll see it also just missed the 382 here by about 20 points, and it's still moving to the downside. It made it off of this one, but it didn't make it off with a high, so that's a little weaker than the rest of the market as we're watching these things unfold. Now let's switch over to the gold market, because we had some really interesting trades here in gold last night. We're going to look at the hourly chart to start off with, because we've had some huge swings. There's our 382 knocking right on the door, just like we talked about. Watch that. And then you can see all we did last night. You can see all we did was make another little Gartley pattern right here down there at 4140. and we'll blow it up so you can see it, and you'll be able to pay close attention to it. But there's the Gartley pattern right here. First of all, we had a head and shoulders pattern here early in the rounding about midnight, a perfect head and shoulders, folks. There's your left shoulder. There's your head. There's your right shoulder, lower than your left shoulder, which Andrew Lowe said that was really a good thing. You have almost near perfect symmetry from highs to lows. You can see that that's part of the sequence of the head and shoulders pattern. And what does it do? It comes and makes a perfect A, B, C, D pattern right down here. Okay, completing it, because that's where the number comes in, and you'll never guess. Those of you that like Fibonacci numbers, if you just draw that in and tap it up, you'll see it was almost $10 off of an exact 786, but there's your ABCD. And what did we do? We rallied from 42 to 10. We rallied $75 in a matter of 2 hours, folks. And there's where we are right now. We'll look at this on a little smaller time scale, because I think we just made a 382 retracement back here just recently, just a tiny bit more, but let's just double check it just for kicks and giggles. There's our low. There's our pullback right here. Yeah, just almost exactly, well, pretty close. Anyway, great volatility, folks. And this is what we're going to start seeing now. I've been saying this for several years, but now it's getting ready to bring all these folks to the door, and we'll see where we are. Okay, now we have other things that I had so many things to talk about today, and I lost my slip of paper. But the one thing we do want to watch is we'll take a look at the currency markets here through the eyes of the dollar index. We thought that was holding up relatively well. And you'll see here, it did. It's still moving higher. We've had an outside day to the upside. The next one we're going to look at is our British pound, and that's got to be getting pretty close to where we want to be buying it, folks. That's at 133 level right here. So let's get the dollar. British pound. Oh, we're getting there's what we want to see. Yeah, we have an outside day to the downside now. We're getting ready to get to this level right here, folks. There's that 133 level right here. Now we had the rally. There's 1, 2, 3, 4, 5 days, and it went to the exact 50% retracement of that level right there. And it missed the 382 by quite a bit, I believe, but let's just double check it. Yeah, we missed it by quite a bit, but there's a 5-day rally just like this one right here. Now it's getting weaker. That tells us we're going to get right down here to this 133 and change. We're only 100 and some pips away. That'd be another day like today, and you'll be there. That's why we have this Thursday. Then we got Friday, boy, coming in Monday. Boy, oh boy, you don't want to miss Monday and Tuesday. That's going to be a really a big, interesting one. Unfortunately, boys and girls, I will not be with us on Tuesday the 2nd. I am going in for my annual physical at hold on one second here. Just 1 second here. There's our ABCD coming in, this level right here. Well, I will be missing the show on Tuesday the 2nd, and no, wait, I was missing the show of the 3rd. Excuse me, my physical's on Monday and Tuesday, and I have to do this. I travel on Thursday, so I won't. God darn, Larry. I travel on the 3rd, so that's the day that I'll miss the market, March 3rd, which is right there. But I will be doing the videos, but I will not be able to be on the show on those days. So that's the main. I will be on Monday and on God, I got this thing so screwed up. I will be on Monday and Tuesday, but not on Wednesday. Okay, get that out of the way, and there's where you see. Let's move over to the Japanese yen. That had a lot of news hit the Japanese yen over last night, but the big news, of course, has been with AI. You know, there's not a mystery. Yeah, there it is. See, it's popping back up again. It didn't reach our level here in the Japanese yen where we wanted to be a buyer. Oh, this is a really interesting one. We've got a 135 pattern here, folks. Let's refresh this, and we'll be ready here. Oh, that's a scam call. God, got to be something to get around it. Yeah, this is a nice trade right here. If we've, there's yesterday's high, so this is still a valid 135, folks. It's got everything that you could ask for. You got symmetry, you got lower highs, just about everything you could ask for. So this last one here looks like it was exactly, just a little above the 786. Then you've got this one here that was just above the 618, it looks like. Yeah, see, there you've got it, that this is a 1, 3, 5 pattern. There it is, 1, 3, and 5. Here's where we are now. So let's go down to the smaller time frame and see if we can finally see there's the pattern. You're getting a chance to put it out too, because there's a smaller time frame. That's it. So this is where I'm going to be selling the yen. Hold on one second here. There's your AB leg right here. There's your CD leg coming in right here. It's 618. All right, now the last thing I want to do
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I want to talk a little bit about fear and greed now. There's no fear in the market at all. We're down a couple hundred points, not even a couple hundred, 150 points in the Dow. We're down 400 and some in the NASDAQ and 73 in the S&P. There's nothing really much there. Now, I'm just going to switch over to the hourly chart, okay? Because you can see here, we've had some big down days before. This one here went from 69.90. We dropped 100 and almost 200 handles in just a few days. Now, so far, we've dropped 100 handles in just one day. Now, that's just a part of the day from where we are right now. The key is below this level right here, below 67.90. That's 100 points from where we are right now. If, in fact, over Thursday and Friday, we get a move like this, okay, I'm just going to draw it in like that and put that in there. If we get that move right there, and it should go below here, that's when all hell will break loose. Well, it's my opinion again, but stop and think. They'll get their statements because it's going to be the end of the month. So they get those on the 28th. That'll be Saturday. They usually come out on Saturday or Sunday. They'll certainly have them by Monday. And then they can look at them and say, oh, my God, I've not made any money for the whole month of January in this bull market. And then they're going to say, well, I'll wait and buy the first retracement, or what I'm going to say. That's why I'm saying this is where we'll see acceleration. And we will see acceleration, folks. You can see here, the last time we had a really big break was back here onto this February level one. You remember we had this big 3-drive pattern filling in right about there, back there in February. That was a big Bradley date. Then we had the rally up, and then we've been rolling over pretty much ever since. A lot of distribution coming into the market at that time. So I'm just a technician, folks. I really don't look at the darned news at all. I hear it once in a while, but when I heard part of the speech by the president talking about golden times are here again with F. Scott Fitzgerald and all that stuff. Boy, that's the kind of stuff you want to hear if you're bearish, because that means it's different this time, and because it is worse this time. That's the bad part, because with that margin debt out there, you haven't seen anything like this yet. But if that margin debt starts to pull in, look out, because that's when you're going to see a move of, probably, a lot. Well, we'll see it. Well, first of all, let's put this into perspective. The largest move that we've had here in the Dow Jones here was back on April the 8th, when Trump said he was going to change the tariffs a little bit. Remember, he was there in the Rose Garden and talking about that and all that stuff. And then the market broke really hard. And then he came back and said, well, we're not going to do that much. And then the market rallied. It rallied in one day. It was up 1,700 points from low to high, but up on the day, it was up 1,200 points. Well, if it's up 1,200 points on any one day, that means the down days will be 1.618 of that. And that would mean it would be down 2,000 points in the Dow. In 1987, when we had the big break, coming into the, that was August the 25th. That was when all the planets at the Dow Jones made its high at 2,700. I was on TFNN that week, along with Arch Crawford, not TFNN, FNN, Financial News Network in Los Angeles, New Mexico. That's where they did their programming. And I was on twice a month, and Arch Crawford and I were on the same day, and we both said there was going to be a crash starting on the 25th of August, and it started on October the 2nd is when the crash. From the 2nd to the 19th is when the market dropped 30% and 15% in one day. Now, 15% into where we are right now, 15% into 4,000. That's 6,000 points in the Dow, folks, in one day. That is a crash. And don't think we're going to see that, but you never know. We haven't seen a crash since 1987, which that was 39 years ago. Shut the front door and raise the rent. So who knows what that means in. But that's where it'll happen if, in fact, I am correct. And like I say, I'm often wrong, but never in doubt. So far, our low here in the S&P here has been 69. We're now 30 points above it. Let's just double check that to be sure. There's where our low was right here, was at 72. We're now at, wow, we rallied. We had 382 rally here, rallied, this big route, 50 points. Here's where we are now. Let's just see what this rally is from the high down to the low. And we went up to the, we're up 50% on this one right here. So we'll find out what's going to happen from this level right there. But there's your 382 was off the high right in here. And that's what be watching. You'd like to, what they'd like to do is they'd like to close it back up in here. They'd maybe even close higher. Heck, I don't know. But that's what they're whoever they is. And they happens to be, there's a name for these folks. It's BlackRock, State Street, and Vanguard. Those three firms control 67% of the stocks in the United States with the money that they have under management. BlackRock alone has $27 trillion under management, I believe. That's what I heard somewhere, so that's a lot of money. It's like our natural debt, national debt. Let's take a look at BlackRock just for kicks and giggles to see what it's doing. I watch it occasionally here. That starts at BlackRock is BLK, I believe. That's over here. Hold on here. Come on, BlackRock. They put these things in perspective. There it is right there. BLK. Get it up on a daily here. See if it's been following along. Yeah, see, it's been doing better. That's their program, Aladdin, that Larry Fink made. And that's it right there. You can see we've been in there. It's holding up just about like the S&P, maybe a tiny bit better, but it's holding up pretty good. Now we start getting below here, maybe not so much, but we did top here back in October, and we've been making lower highs. Of course, we've had some higher lows too, so it's not really dramatic anything going on to that level. There's no whiff of a crash here and anywhere at all. A crash is when there's vacuum there, folks, and people can't get their orders filled at any price. And that's what you want to stay away from. These markets are huge. Remember, folks, Warren Buffett, when they brought out ETFs for the first time, he said, history will go into the books and saying these were weapons of mass destruction. Well, the weapons of mass destruction have now exceeded the stocks on the New York Stock Exchange. There's more ETFs than there are regular corporate stocks. That in itself should be a little scary, along with all the other things that we've got going on in this thing, okay? So those are some of the things that I'm looking at right here. Let's take a look at the old bonds and see how they're doing today. Time goes so fast when we're having fun. And we've got 36 seconds to get the bond up here. Hopefully I will be able to. Let's get this out of the way. It'll be shown while I'm not talking, so let's just get this up here and we'll see where we are here with the bonds. And then they get to that one, well, we're right back up to 06 again.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, now here is the Dow Jones. As you can see here, we made a lower low on the day. So we always suggest that you see that observation. What you want to do is to change your 382 level to the higher high and the lower low. And here we are sitting at there right about now. In fact, we're about 20 points above it. So it's holding up here pretty good. We moved here since being on the air. We moved up 300 points in just a matter of about a half an hour. So it shows you how active these markets are. Maybe it'll close way up in here. Who knows? Maybe this is a great buying opportunity. The patterns say maybe not so much, but that's what we're paying attention to here as we're looking at these before. Now here's the notes. When I finish up, the notes are ready to break out to the upside up in here. We've been here 1, 2, 3 days. Probably will take that out. And then we also want to look at the bonds. We're probably going to take that out. All that means is, folks, we're having a little bit more of a rally. And you'll notice here that it's got some pretty serious resistance up into this area right here. But there's your 78% level. We have to go popping through here. So far, we went up to the exact 786, and we backed off a little bit. So to me, if you look at the long-term picture in the bonds, especially if you're looking at the weekly chart, it's going to take something of a miracle to get this thing, back up into this area right here. I just don't see that happen. We've been here 1, 2, 3, 4 years here after the big thing they called negative interest rates. And there's where we are right now. We could easily, if they do break out, we could easily get to a 382, and that would take you up into this area right here, which would be up about 20 handles to about the 137 level. Let's get all these lines out of the way so we can see the ones that count. And we'll just draw that in. And you'll see that we could pause. That could be just done on a flight to quality there at 139. That's a lot of money, folks, in the notes and bonds. That's $30,000 rally, $30,000 rally in bonds, and you'd still be in a very bearish market. So we've got some interesting things to look at here as we understand. Now let's take a look at the wheat market, because we talked about that 382 the other day. Let's see if it's held its own here. Yep, it's bounced a little bit today, but you'll see as we move over here, we did make a 382 right there off of the high from 2005, 2004. There's where we are right now. That came at 80. So far, the lowest we've been here was 64. We backed off 16 cents. Now we're setting here down about 8 cents from where the high was made. So not much of a pullback. And if we get above here, that tells us it has legs. But right now, it's still a little bit early to look at that. Now, I've asked a question here to take a look at natural gas. And we'll get that up here and take a quick look at it. Here comes natural gas. All righty, and there's where we are right now. See if it had any vol. Ooh, we got some movement to the downside today. Let's just do this. Refresh everything we can, because I had a little bit of a data problem. Now we're going to take a look at the inside of this and see where we are. There was the forecast for today. Let's just bring it up here, see if it was any good. Said it had a bias to the upside for a while. This is a pretty wild day because you don't see any really clear. There's an ABCD pattern right in here, but you have another one that's forming on this, and that would be over in this area right here. So we'll take a look at that. There's your AB leg right here. There you go, right here. That means you make a new high there at 284. That'd be up about a couple bucks. Now, all we'll do now is just reverse this to see if it fits to what we think it's going to do as far as making a high up at that level. And we're going to invert it to make it look like a mirror image of what it is. And we're going to see, oh, it's fitting nicely. There it is. There was your low right there, pulling back right there. And now we're coming up. You want to be looking to be a seller up here at 247 around this time, which is in about an hour. Very good, interesting one to look at. That's an ABCD coming in right there at 284, making a new high on the day, and be lined up with this high, which would be right at, that's 1230, let's see, 130. Around 130, that's what you want to be watching to see if it's going to be doing that. Now, it's been hitting hard. You can see we've been down here for quite a few days in a row. So it's a big, big move to the downside. Not many people want to buy it, but this is the first time you're going to get a chance to sell it against that 382, which makes it an interesting pattern to unfold. Okay, now we have to check a couple of stocks. We've already looked at Nvidia. We've had one other one we want to talk about, which is Palantir. I don't know anything about it, but I rely on Mr. Jameson because he thinks that's going to be one of the better ones that over the period of the next 1,000 years or whatever that time frame is. They've hit it pretty hard now. You can see we're down here at this zone where it should have been bought but had no rally. Look at that. This is just no rally as of yet. Boy, that's not a good sign. So that probably means we got more to go. Just looking at it on the shorter time frame, you can see here we do have these lower tops in here. That basically is that 135 pattern again. There's 1, there's 3, there's 5. Move that over a little bit. You'll see that there'll be some nice symmetry. And all that symmetry means is you can see that from days up. See there, 1, 2, 3 days up, 1, 2, 3 days up. The markets repeat over and over again. And that's why Andrew Lowe wrote that book, because it shows that the market is chaotic in nature, but within the chaos are non-random patterns. Our strategy is it's not how much money you make, it's how much money you don't lose. So you have to love your losses, because your first loss is just that much closer to your next winning streak. So when you have a loss, that's how you have to look at it, because you don't know which ones are going to win. We don't know which ones are going to lose. We take a calculated risk speculation. That's what we try to do. All right, now let's get up here and take a look at the soybean meal for Hector in Juarez. Wow, Juarez, Mexico. Listening to us, that's something. Hold on just a second here. SM, I was there once, many, many years ago. SM, shut the front door. Here is the meal. Let's get this meal up and take a look at it. This will be blank. Oh, we're up to the 786 level right in here. And yep, I would be taking profits up in here. There's your 78% level. You backed off a little, had a nice run off of this last run, which came in just about exactly at the 61% retracement, as I recall. There it is right there at the 61, and away it goes to the upside. So you can trade any of these things, trading any of these numbers, because they all work on anything, but they don't work on everything every time. That's the key. They work on most things most of the time, but not everything all the time. There's a big difference, and that's what you got to realize, because I have a tendency to think it works every time, and that's where I sometimes get into trouble. I don't stay into trouble very long for you folks, because I know you're accustomed to losing, you're accustomed to winning, but you're not accustomed to losing everything. And that's what you'll never do with me, because after the end of the second day, if I don't have a profit in something, it's sayonara. We'll be right back, folks. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the Canadian dollar. As you can see, over the last several weeks, we've completed a perfect ABCD pattern right here. Just draw it in. There's AB equals CD. And it went up exactly. I'll put it in here. And it looks like it missed it by, well, it's got to be close because, well, something's wrong with this tool because it's got to be right on the money. Let's just do it the hard way. I mean, the easy way. Okay, let's just draw the line. This is how I used to do it, folks, before we had all these computers. I did all these by hand. Just get this up here, right here. Yep, there we go. Yeah, it comes pretty close. Yeah, 63. The high was 36, 37. Wow, 37.58, so it comes pretty much spot on. Hasn't really done very much, but that is the ABCD. Back in the old days, I had to draw all these by hand on commodity perspective charts, and then in 83, we started getting computers with a few little 12-inch screen and stuff. We'd see the little patterns unfold, and somebody put in fancy things like moving averages and all that other stuff. That's just built into this program, folks. I don't actually use that at all. Just take that off. These are some of the things I do use when I'm watching something like that. But the Canadian dollar should start to go down some more. And we've had another move. In fact, this move right here that we just had, all right, was far less. Oh, no, it wasn't either. Look how closely they are. See how that move is almost exactly like the other one? That's just the market repeating what it's done before. That Andrew Lowe talked about, Gardley talked about it, Mandelbrot talked about it, and I use their knowledge and I talk about it. So those are the main ones. We're having a good rally now. The Dow's almost unchanged on the day after moving up pretty good. Let's just see if that 382 is busting by just very much at all. That'll give us an idea where we are. No, it actually held a little bit. Now it's backing off a little bit. So live every day in an attitude of gratitude, and may God bless. Try to join me for the live trading, folks. That'll be a lot of fun, and I'll see you after that on Friday at regular time. So live every day in an attitude of gratitude, and may God bless.